cost of car insurance has increased extremely fast to the point where it's actually at the all-time highest, fastest rate in just under 50 years. It's ridiculous how large of an increase everybody is seeing across the board. If you haven't felt that squeeze, you're about to. Some people are just now starting to get past their 1 year or last year policy to where they're seeing that 20 to 30% increase. I unfortunately got that double hit where I got 30% all in one. Nothing's changed. The part where most people are feeling that hurt is they don't expect it, and it's just bam, all of a sudden that next renewal hits. It's what do I do? Should I just shop around? We're going to go over that and discuss the options and what you have available, but let's discuss more in depth what's actually causing this increase. There's about 6 or 7 major pieces of this industry that are being affected that is causing the rate increase to skyrocket. By the way, if you do decide at any point you want to shop around for car insurance, I'll put a link in the description below where you can work with an independent agent. They're able to shop it across multiple companies. So finding your profile fit will usually find the right company, which in turn usually gives you the best pricing. Initially, this article was from the Auto Blog, and they used some of the statistics from the Bureau of Federal Labor Statistics, and they were showing that in the past month, the average cost of insurance has gone up 22%. Previous months, it's gone up additional 20%. So we're looking at a minimum in most states, almost 40% increase in the cost of your car insurance. That dates all the way back to December of 1976 when the insurance rates went up about 22%. A lot of that isn't necessarily the insurance causing the wave. Part of it is from the dealerships. When 2019 hit, we had the pandemic, and when that all happened, a couple things happened from that. One, the labor just dropped. 40% of the labor for mechanics just went out the window. Now, because of that, the cost of materials went way up, partially because the ability to get the materials has been more scarce. And the cost of cars has risen, which you're seeing on the lot. Look up a car today. If you could find the MSRP of a year or 3 years ago, it's considerably different. Because we got some money back, we were able to afford the larger and better cost of the cars, and it wasn't a big deal because our income rose as well as the insurance. So because of that, we bought nicer cars. We had nicer vehicles. Now that we're getting in accidents with those nicer vehicles, we're having to pay more for those repairs. And the insurances are having to come back and combat that because they're losing their profits almost to complete losses to negatives. On top of that, statistics from AAA have shown that we are actually getting in more accidents coming out of that pandemic into 2021, 2022, and 2023. Moving into 2024, it's not gotten easier or better, and 2025 is going to probably be similar, or at least level off a little bit to where it's not as severe. We're averaging about 10 to 15% more severe accidents where there are worse claims, there are more deaths, there are more damage, partially because costs of the vehicles are more, but in general, they're up 10 to 20% across the board. On top of it, for some reason, we forgot how to drive. From 2019 to 2021, it's almost like everyone just forgot that you're not supposed to have your phone in your hand and you're not supposed to be driving down the road with one foot on the wheel and car surfing or whatever you're doing now. And in general, our statistics have shown that we've become worse drivers in the last 3 to 5 years. Yeah, Mark, no way, I'm a better driver. Tell that to the 10.5% fatality rate that has increased. People are seeing the damage, and some of them are in those severe cases. Unfortunately, we hope to never have that, but that is just what has become over our driving habits in the last several years. We are getting better, and this is improving, so we've gone down, I think, 3% from that high of 10, and so we're getting better as driving, and we're cracking down a little bit further, partially because we got to get the insurance in the right position to where we're not only paying for insurance just to survive. For those of you that are going back to work in offices, you've got to drive to your job, and you got to have insurance, and you've got to pay all these bills, and you got to pay the gas, and your groceries are 30% more. All of these things have piled on, and just to work, just to live and survive, we're paying way more, 30+%, I would guess in my world, at least, to just make the average income that you had before. Keep in mind, now we talked about the price of the cars went up, but our income also went up. That is part of the benefit of what has happened in the last couple of years, is that we are averaging about 20 to 23% larger incomes for most families. So technically the cost of parts is 3% cheaper because even though they went up, they followed the income. Now, not everybody is in that scenario where you did get those raises and you did get that larger income. But if you are making 30% more income, then the cost of the insurance, even though shocking as it is, isn't necessarily as high as we thought it would be. Companies like Travelers hasn't increased as much. They're 16 to almost 17% increase. Other companies like Nationwide hasn't had a large increase. But they have had what's called pre-binds, and they're starting to eliminate the higher risks to it's almost impossible to get insured with them. They've updated their guidelines so that the average consumer can't necessarily just join them. It's not like it was before. You hop online and you can just buy it right there. Yeah, you can still do it with Geico, and actually Geico is the one seeing some of the profits because most people don't understand the policies that they're purchasing. And when there's an accident, there's almost nothing to pay out because you didn't purchase the right coverage. In those scenarios, we're seeing that cost hurting the person rather than hurting the company. And companies like your online purchasing options are going to win in that scenario because you're the one making the choices. However, Geico has even stated that they are seeing a 14% increase on bodily injury claims. They're seeing about a 3 to 6% increase on property damage. So they are also seeing some of these larger claims. It's just they're not having to pay out as much because of what we just mentioned. What shocked me the most was in the article they talked about a diesel mechanic that makes $200,000 a year. That's massive, but it's because of the scarcity. So that diesel mechanic probably is very well skilled. I would probably say he's one of the better mechanics out there, but they're averaging that right now with different companies because they're so scarce of a mechanic, and we need those. We need those vehicles running. We need them working. And we're seeing about a 30 to 40% decrease in those types of mechanics. In that case, your car insurance or your truck insurance, your business insurance, for those that are doing more commercial type stuff or driving diesel type vehicles, are going to see a way bigger increase. That's not negating some of these cars that have been manufactured recently, specifically Kia. Made a video about them where they were getting stolen more often and they had a security flaw to where people were breaking into them. Now, that's going to severely hurt the cost of that company going forward for the next 3 to 5 years because of the reputation. How can you trust that car's not going to get stolen over and over when the history in the last couple of years has shown nothing but that? On top of it, weather has also played a factor. In some states where your weather has gotten more severe, there's been more weather-related incidences than the last 10 years. We're seeing states like Florida having more hurricanes. We're seeing states like California having more wildfires. We're seeing Texas just go nuts. There's all of a sudden these floods. There's all of a sudden these freezing rains. There's all of these things that has happened before, but it's happening more severely and more often, and insurance companies were not prepared for those. When they weren't prepared for those, they're trying to adjust to combat that so that they don't just lose everything. There are companies that have gone insolvent. That's not a blanket statement. There's 6 or 7 companies in Florida alone that have just gone bankrupt. Imagine having that policy and you get in an accident right after they went bankrupt, not knowing it. You're not covered. There are laws and rules and there are ways to get, there's some other ways, but now it's that hassle has fallen on your lap. On top of it, you got to find another company that is 3 times the price. So what can you do to fix that? There's a few things that you can do today. There's a few things that you can do going forward, but there's also some things that you need to be aware of. The main things you can do today is 1, shop around. Honestly, the best fit is your profile. It's your insurance score. It's your history. It's your cars, your location, your everything about you and your driving world. What are you willing to do? Are you willing to take a telematics driving test? Are you willing to prove that you own the car and show the registration and show, like some of those companies require that. And your better option companies may want you to jump through more hoops to get to their insurance premiums. That's one way to do it today. The other part is to debate whether you have the right coverages on the car. It doesn't mean you need more, sometimes you need less. And understanding your situation, where's your finances at. The whole point of insurance is to make you whole. So if you carry 3 times of the insurance than you need, then yeah, you're gonna pay more. If you have $100,000 of liability or a good income, then you don't necessarily need $1 million policy. Although it's nice, and if it's cheap enough, then great. But if it's something where it's starting to become a strain, we need to look at those pieces. How old are your cars? What deductibles do we carry? And then the things that we can do in the future are planning ahead. How can we improve our insurance score? How can we improve our profile? How do we know when the longevity discount's gonna kick in at the max deal? Should I switch insurance now, or should I just keep what I have today? What other moves can I take that will actually get me a better deal? Not necessarily things you have to do. I'm not going to go become a teacher to get a teacher's discount. Obviously, that's not going to happen. But there are a ton of discounts that people are qualified for that don't even know exist. That's why having that independent agent that can shop around those companies, they know those discounts, so they understand that part of it. Although they've been tighter and restrained, and not all of the discounts are popping out under the sun right now because insurance companies are taking a step back. They're trying to get their pricing right. They're trying to make sure that the industry is not going to go haywire again. They're a little bit scared, to be honest with you. Those independent agents have the ability to check those different companies and sometimes get you into those companies that a normal person couldn't just get into. Again, if you are shopping around, the link is in the description below. Your main process to do next is to understand two things. One, do I have the right coverages? If you want to learn more about the specific coverages, I've got Insurance 101 that'll go more in depth. And two, knowing the discounts, home, auto, renters, all of those pieces, knowing what discounts can help you are going to be beneficial. I have an insurance discount here that you might be missing some of them. If you have questions, leave them in the comments below. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.